Okay, so I can already tell this is going to be a controversial video, but I have to make it through the lens of risk management. Also, let me be very clear that I'm a firm believer in Amazon.com, in their stock price over the long term and in what they do. However, I do think we're getting to the point now where we have to start getting somewhat realistic as we're getting also long in the tooth in what has been a long cyclical bull market of what the chances are that a stock like Amazon.com and some of the other ones will actually correct if and when much more than the broader market. This is not me coming up with this theory. This is usually just what happens. This is really important through the lens of risk management. Again, I'm not calling for an imminent collapse of shares of Amazon.com or the broader market, not at all. But I want to show you guys here's a couple things that I think are really important to be prepared for and to keep in the back of your mind.
So what tends to happen as cyclical bull markets, not secular, cyclical bull markets age, those are usually the ones that last, 5, 6, 7, 8-ish years, is that we tend to get more and more of a concentration in a few stocks that are just the ones that everyone likes. Right now, here in September 2017, some of those names are the ones that we've known for a long time, but everyone still really likes to pile into, like the Googles and Amazon and Facebook. And these are great stories. Again, let me be clear, I really like these stocks. Long-term, absolutely. But we have to start getting used to the fact that at some point, when the broader market corrects and a cyclical bear market happens, which in my mind at this point isn't that far away, although again we're not there yet, but once that starts to happen, we will most likely see a much larger pullback in something like Amazon.com as opposed to, say, the S&P 500. Let's say the S&P 500 drops 15-20%. Shares of Amazon are probably going to drop about twice that. That's just generally what will tend to happen. Why? The stock has risen much more, so it's just pure arithmetic, but also because a lot more people are crowded in those names and a lot more weak hands are actually in those names, and they will start getting out of the stock and it'll get the stock to crumble down. So that's one thing to keep in mind. So it's just basically statistics and history. Well, let's have a look at shares of Amazon. Over the past 5 years or so, the pullbacks at the margin have been getting smaller and smaller. And so, for example, you can see here back in 2012, we had a pullback of a little more than 30%. Then we had one just shy of 30% or around the 30% mark here in 2014. Then we actually had a pretty good one around the 30% again in 2016. And ever since then, really, we've had a 15% pullback. And right now, as I'm recording this, we're looking at about a 14-15% pullback so far. So number one, these pullbacks have been getting smaller. But number two, just note that Amazon can drop 30%. And a lot of people that are in this stock right now have forgotten that. Again, over the past few years, we've had 30% pullbacks just since 2012. So it's really nothing uncommon. But I do think once we get into a cyclical bear market, the retracement could be even larger, more to the tune of something like 40%. Also, what that would do is it would get the stock back into its longer term channel or its longer term range to the upside. It's one thing for a stock to rise very steeply, as Amazon has, but at some point it'll tend to mean revert back to its longer term trend. And from that perspective, I still think Amazon over time will have to mean revert back somewhere into this range. Doesn't have to be the lower end of the range, but somewhere within this range. That would certainly then also get the stock from a numbers perspective to drop just around 40% at least from the current level. So again, just a bit of a risk management note here. Hope this makes sense, guys. And of course, the question is, how do you measure all of this? How do you measure these trends? How do you know when Amazon is about to start dropping? Well, that's what we have proprietary scanners for that I walk my Clubhouse members through on a daily basis, so we know exactly what is near-term bullish, what's near-term bearish, medium-term bullish, bearish, something for the long term. Once we start seeing these trends start to go from near-term bullish to bearish, also in the medium term, we will have a really good handle on how to do this, and there won't be any guesswork. But it's important to have a process, folks. We use our proprietary scanners and other things for that. If you're interested in any of that stuff, just leave us a note down below. We're happy to set you guys up with those.